Fine. Okay, this is what we are talking about, something with respect to today is what? Today is 2nd of October. Okay, this is very easy chapter, very easy. It's a small one and very easy. Okay, what happens? Now, assume you are doing business. Is it right? When you are doing business, assume it is a group. Is it right? You are having different types of businesses. Fine, you are having different types of businesses: business A, business B, business C, D, and E, and F. Is it right? I'm giving you a complete summary in 5 minutes. Okay, when we do the things, what will happen? Maybe because of some reason or other, is it? Because of some reason or other, this company is not, this business is not working. Is it right? This business is not working. When it is not working, what you will do? You will discontinue it. Is it right? You will not carry forward the business. You will wind up the business. You will close out the business because of reasons is not working, because it's incurring losses. Is it? It's incurring it is incurring losses. Because it is incurring losses, is it right? What happens? Definitely you are not willing to continue that business for over a period of time. Then what happens when you are discontinuing it? When discontinuing, definitely you will have the assets. Is it right? You have the assets, and you have the assets basically. These assets, is that which are type of assets you will have? You will have current assets, non-current assets, and current assets. Definitely when there is it's not working, it's not no performance. Is it right? There is no performance as such. In that case, what will happen? Definitely the cash balance will be less. Definitely the receivables will be less. Is it right? The receivables will be less, and definitely we will have the company will have problem with respect to inventory also. Fine. This will be there whenever we are because of non-performance of the company. Now the issue comes with respect to what? Issue comes with respect to non-current assets. Now what you will do when you are winding up the business, when you are closing down the business, what you will do? You will sell off. Use it right? You will sell off non-current assets. When you sell off non-current assets, you are deciding at some point of time that when I have to sell it. Once you have decided, it's decided. That's all. Again, you should not get back to it. Is it right? This process is basically concerned with IFRS, International Financial Reporting 5. Okay, international. This is one of the report. You have to report. It is not accounting. It is reporting. You have to report. Is it right? That this business is not working, and we are going to give a treatment for the non-current assets. What you are doing after that, you are paying off to your equity shareholders, your liabilities. That is a different case. We are not concerned about that. We are concerned only about till what stage. We are concerned about only till the stage of the non-current assets. That's all. How we have to make a treatment with respect to non-current assets as per International Financial Reporting System 5. Okay, that's a dispose it of. Now, how you have to close the business, that is also very important. Now, what will happen when you are having 6 different types of business? You will have profits with respect to this one, is right? You have profits with respect to this one. Here you will have what? Here you will have losses, whereas in other companies you will have profits. Is it right? Definitely what you are doing when you are having the profits of this company, the issue is how best we are going to take these losses. Where we want to? We have to take the losses to the parent company. Okay, to the group company as such. In our case, we are talking only about 2 companies. One is the profit making company, other is the loss making company. Or in some cases we go further to more than 2. Okay? In that case, what is most important is these losses, is it? These losses has to be absorbed. Is that these losses has to be absorbed with respect to the other profit making units. I will put it as these are the different units. Is it units are, you can say, different types of business. We will not say business, we will say different types of units or different types of divisions. Is it right? Different types of business. You will have in the same case, is that you will say that most of the time it happens, is that you are having, assume you are having spare parts. You are not only selling the cars, but you are also selling the spare parts. You are selling the service also. Sometimes service is not more attractive, then we will close down the service business. Is that you are having so many, you are talking in terms of the products, gadgets, is it right? We will say that yes, this service is not giving profits, then we'll have to close down the business in between the during the year as specified. Here also I'm stressing again and again, you have to mostly in all through the time you have to think about the dates. Okay, this much we are going to do in this lecture. This is the summary about the lecture as such. Now what is the, upon completion of this chapter, you will be able to know what is the importance of first you have to identify and you have to report what results of the continuing and discontinued operations. Is it what is the we have to show what is the continuing, also we have to prepare financial statements, discontinue also we have to prepare financial statements. When we are doing this, definitely we are saying that whenever there is a discontinued operation, is it right? Whenever there is a discontinued operation, definitely there will be some non-current assets that is held for sale. We'll dispose of those non-current assets. Is it right? Whatever it is, whether profit, loss, that's a different thing. Is it right? Account for, we are very much concerned about how we have to make an account for non-current assets. Non-current assets are important. How we have to dispose it of. Is it? What is the definition of discontinued operation? When we are going to say that this company is going to be discontinued, there are some clauses, there are some regulations. Is it? Account for discontinue of how again we have to make a financial statement. Is that we have to prepare financial statements. Mostly what we are doing, we are talking in terms of income statement. Is it? We will prepare the income statement and subsequently there is a disclosure. Separate, you have to mention it separately. Is that what is the reasons, how much you have been accounted and how much it has been treated with respect to your income and expenses. Is it? This much is the basic concept we are going to arrive. Very simple. That's the summary what you are going to learn. What they say, definitely what we are going to have a classification, how you are going to classify continue operations and discontinue operations, how we are going to measure it, how we calculate it, and subsequently how you are making the presentation. Most important thing what we are going to stress, we are stating about what? Non-current assets. Held for sale. Held means we are expecting it to sell. Is that? We are expecting it to sell. In particular, such assets should be presented separately. We should not combine with other assets. Whenever we are going to, whenever you assume you are going to sell some assets, you will keep it separately. Is that? You will not mix up the thing. You will identify these are the assets I am going to sell it off, and these are the assets which are going to be treated separately. Okay, that's the same thing on the face of the financial statement. What are the updated rules for discontinued operations? Is it? Whenever a firm is going to discontinue a division, a part of the business, in particular, we have to take the results. Results is nothing but we are talking in terms of financial statements and presented separately in the statement. We should not mix up the things. See, what will happen? We are talking about sales. Is that? We are talking about all the things will happen. Is that? Then we will have profit after tax. Is it right? Then what we'll do? We will have other comprehensive income. Is it right? Other comprehensive. Then we'll say that we are talking in terms of total profit for the year. Is it right? profit for the year. This is where we are doing, is it right? If with respect to IFRS, is it right? If with respect to IFRS 5, what we'll do, we are talking about sales, all the things will happen, profit after tax, is that we'll create one statement for continue operations, is it, and one statement for discontinue operations, is it right? Discontinue operations. And for discontinue operations also we will prepare. Definitely here you will have the profits, is it right? Here you will have the profits and here you will have the losses, is it? Now what happened, these losses, is it, we will deduct here, is it right? We'll deduct, what will show, we will show separately discontinued operations, is it, we'll show separately and from this discontinued operations, what we are doing, we are reducing the losses. That's all. That is the only thing we are doing here in the entire lecture, is it? In the entire lecture, that's what we are doing. We will show it separately and subsequently we will deduct the losses. Means we are showing the financial statement, income statement for continued operations separately. We are showing the income statement for the discontinued operations separately. Whenever you discontinue operations, you will have the losses. These losses should be shown separately. We should not mix up with the normal operations. They mean the losses from discontinued operations. Then we'll show the profit for the year. Is it okay with you?
Yes, it's okay.
Yeah.
Yeah.
It's very simple, isn't it? That's what it says. See, whenever we are talking about IFRS 5, isn't it? You have discontinued operation. You have to have a separate presentation. Is it a separate presentation and disclosure is required? You should not mix up the things. Is it non-current assets held for sale? Definitely, is it as simple as that? We are running the company and saying that yes, this is the division we are not going to continue. Definitely, you separate all the assets and those assets should be held for sale. Is it right? Reclassify as a current asset. Now, what happens whenever you are talking about the non-current assets? When we are going to held for sale, is it right? When you are planning to decided to sell, not planning, decided to sell, these non-current assets will be treated as, is it, will be treated as what? Will be treated as a current assets. Understand what? This will be treated as a current asset. That's what we want to sell it off. What is the rule of the current assets? If it is going to be less than 1 year, is it right? Then we convert this. That's why I say reclassify. Is it right? We are reclassifying the non-current now as a current assets. Now, when you are reclassifying at the current assets, see, you understand these problems are very easy. Treat this as a current assets at a lower value. Is it? We have, what is the lowest value? You have the carrying amount. You will have the fair value. Is it right? You will have the value held for sale. Is it? What are the different values will be there? Now you have a very more clear picture. You have a carrying amount. Is it right? You will have a fair value. Is it? You will have a fair value and you will have the value held for sale. Okay. This is the new one which we are going to use. Now, whichever is the lowest value, is it right? Whichever is the lowest value, that lowest value we have to take it. That is one of the conditions of IFRS 5. Okay. Now, in the lowest value, they have mentioned it very simply. Either you are talking about the fair value or you are talking about the current carrying amount. Is it? That's all. Again, I say it's a discontinued operations. Non-current assets will be treated as a current assets and current assets will be treated as a lower value. Is it? As a carrying amount or the fair value as such. Is it? That is the core conditions about the things as such. Now, how we are going to classify it as a held for sale? What is the definition as such? An entity shall classify a non-current assets as sell for if its carrying amount is recovered. Principally, why we are going to sell it based by rule, by a sale transaction rather than continuing the use. What is the classification have held for sale? That it is, we are going to make it a point that we are selling it. You have to sell it, then only it is going to be treated. IFRS para 6, is it right? That is the definition. If it is not going to be held for sale and we are not selling, what is the alternative? If you are not selling, we should not transfer it, is it right? We should not transfer it. We should not transfer it to other departments. No, once we sell it, means you have to sell it practically, in principle. Okay, for this case to be, the following conditions are applied. The assets must be available for immediate sale in the present condition. Is it? We have to sell it in the present condition as it is. Is it right? The sale must be highly, means there should be a sale. Is it right? Probably means there means we are going to sell it. 99% chance of selling. Is it right? Then only we are going to say it is going to be classification held for sale. Management is committed to the plan. Again, they are just making a point. You have to sell the assets. There is an active program. Definitely, when you want to sell the assets, there should be a buyer will be there. The asset being actively marketed at a price. Definitely, you have to market it. You have to give promotion, all those things. Then only it will. Means it's not like that you want